Hello YouTubers, it's Friday, I'm in Istanbul and you're watching Real Turkey channel with presenter Atilla Yeşilara. Today I'm going to talk about the Istanbul Stoc Exchange, in other words, Turkish equities, which have been one of the best performing in the second quarter among emerging markets equity indices, which is kind of funny because Turkish lira has depreciated against dollar by 15% and there has been a massive exodus of international investors from the Istanbul Stoc Exchange, but it rallied like 14% in dollar terms and 22% in Turkish lira terms. In addition to that, market participation or trading volume has soared fivefold, according to the Bloomberg article I read today. The number of investors, mostly retail investors, Turkey doesn't have a large institutional base. The number of retail investors rose from roughly 1 million at the turn of the year to 1.56 million by the end of June. So what the heck is going on? I mean, what is so good about the Turkish story that the stock market is rallying so sharply, and can it continue? It is really a bizarre case of a government forcing its own people into risky assets and creating a speculative bubble by design. And this is very unlikely to end well. Not only in Turkey, but across the world, the ability of the monetary authority or the regulatory authority, which in Turkey's case is BRSA, Banking Resolution, etc. board, to calm down or to slowly, painlessly deflate speculative bubbles is very low. We have seen that in many incidents in the past. Right now, China is also pulling the same trick by using state media to invite people into the stock exchange. That shall not end well either. How is Turkey forcing actually very conservative, high net worth and just small savers into the stock exchange with which they are not familiar? Very simple. As of June, Turkey's CPI inflation reached 12.65% on an annualized basis. The central bank held a video conference with over 200 experts and investors yesterday, assuring investors that this spike in inflation is temporary and it will very rapidly decelerate to its year-end target of 7.4%. You may not care about my personal opinion, but the market consensus is around 11%. So within the next 12 months, market experts or those who answer these surveys by Reuters, Bloomberg, etc., expect double-digit inflation. But what is the interest rate that's offered to an average saver, average Joe or Ahmad or Attila or Aisha? 8% before taxes. And Turks are very short-term oriented investors, which is not a criticism, but a reflection of the tremendous political, economic, and regulatory uncertainty reigning in the country. Under those circumstances, every investor across the world shortens its investment horizon. So, given that the bulk of deposits is in the 1 and 3 month range, there is no way, not even miracles, would cause inflation to decline so sharply that TL deposits would earn a positive real interest rate. Moreover, I think it was Metropole, again, which surveyed the people about whether they believe inflation data. I think, again, if I'm misquoting the numbers, I sincerely apologize. As you see, this is an impromptu broadcast. I don't use notes, which I probably should, but I'm giving you ballpark figures. A large number of respondents to the Metropole survey said, no, they don't trust inflation numbers. I don't know what the public perception of the ongoing inflation is. But even if you think it's only 15% rather than 12.65, then ex ante, Turkish deposit rates are incredibly negative. And every moment I keep my money in the bank, I am actually sending a gift check to the government. It doesn't have to steal my money. I am giving away my money to the government. At times like this, people usually rush into bonds, but Turkish bond market is also under sort of an implicit yield curve control by state banks, which don't allow rates to rise. And the currency market is also very tightly controlled by state banks intervening continuously. If you draw a chart of the dollar TL exchange rate over 1 month, you would see it's anchored at 6.85 with the standard deviation between 8.64 to 8.86. I'm sorry, 8.84 to 8.86. There is no way this could be the natural behavior of a market. I mean, someone instructed state institutions to keep the exchange rate at that point, and they're fighting valiantly to fulfill their orders. They are doing a good job so far. But the result is, with banks offering less than 1% on dollar deposits per annum, neither is there any possibility for the poor Turkish saver to make money in foreign currency deposits or foreign currency assets. As a result, people who are not very sophisticated in terms of financial investments are rushing into real estate. They're buying condominiums, they're investing into projects which will take years to complete, or they are simply buying plots, which I don't know if it happens in your country, but your average Turk is very comfortable going into a village and buying some 20, 30 acres of farmland in the hope that in the future it will be converted into an industrial zone, etc. This is, of course, for rich people because real estate prices are not cheap in Turkey. In fact, on a purchasing power parity or per capita income basis, they are as expensive as Manhattan, and you know how expensive Manhattan is. What does the poor men and women do? They buy second-hand cars. Yes, we have a tremendous speculative rally in second-hand car market. Prices are being marked up 30-40%, and Turkey's antitrust board is actually investigating second-hand car dealers to see whether they are gouging prices. This is clearly crazy. I mean, I don't know who said it in 19th century, a British scholar, an economist, who said that when greengrocers and housemaids start buying stocks, the end is near, something like that. I am subquoting. And this is the case in Turkey. I mean, the stock market will inflate for the time being. And this inflation is also helped by the stock market administration, simply because short selling in Turkey was forbidden. For 3 days, the bans were lifted. And last Monday, 6 major institutional global brokers, I don't want to name their names, but you know who they are, have been banned from the stock exchange from trading for 1 month to 6 months for abusing the short selling powers. I honestly don't know what that means. Short sellers by their nature are speculators. They think that the price of an asset is going to go down and they want to benefit from that. But anyhow, with no short selling or short selling in the gray area, you don't know if you're going to be investigated or whether the regulatory authorities are going to bless your transaction. Really, the downside is extremely limited. More importantly, there are certain liquid stocks, top 30 stocks, banks, holding companies, major industrial exporters, etc., which were purely the domain of global investors, in the sense that these stocks were extremely liquid, and a fund wants to buy and sell in large lots. Even if they didn't like the stock, they purchased it as a proxy for the Istanbul Stoc Exchange or for Turkey's growth or reform prospects. Now that these funds are no longer around, these stocks have become hunting grounds for Turkish speculators, high net worth individuals, and another Turkey-specific institution, informal investor syndicates, which get their investment advice from WhatsApp and from shady social media sites, and then cooperate or collude to buy the same stock to drive up the price. So, all this being said, I think the Turkish Stock Exchange is set for a rally for the next 2 months, simply because we're cut off from world developments and there is really no other game in town. But at the end, this kind of forced speculation is going to backfire. At some point, even if there is no reason, the average Turkish investor would think, well, I've made enough money. Or, God, I mean, this stock is expensive. Why should I stay any longer? And there would be an exodus. It would start slowly, but eventually turn into a landslide. And the stock market would crash, which would prevent companies from raising new equity, as well as undermining the psychology of the nation. But there are broader dangers in this type of policy. I mean, I don't think the government wants to actively push people into the stock market. Their objective in terms of keeping interest rates and the dollar versus TL artificially low, suppressed, is to lower the inflation and to make sure funds go to fixed investment. But unfortunately, with capacity utilization at 70%, and most companies not being certain about future demand conditions, there is really no private fixed investment in Turkey. And the currency peg or anchor would hold until September, when two serious dangers await Turkey. The first is, of course, our foreign currency debt payments will start. And by August or so, our current account deficit should peak at around $25 billion or so. In other words, there would be increasing outflows from the Turkish foreign currency market, which would add to the pressures, and the central bank doesn't have the kind of reserves to defend the Turkish lira. Secondly, I have shot a video about that below. The Trump-Biden race has global implications. I think it's important not only for the United States, but for countries like Russia, Turkey, and China as well. In terms of China and Russia, probably policymakers would want to know whether Biden would continue the Trump policies. In terms of Turkey, Erdogan and Trump have struck a very strong friendship, which allowed Erdogan to get away with many things that the American policy establishment doesn't necessarily like purchasing Russian-made anti-missile systems. There's a host of issues out there, which, again, I have, for each of them, I shot videos in the past. If Trump wins, again, no commentary on how the American people feel on Trump. It's really not my bailiwick. But Turkey will benefit from that, because there could be a stronger alliance between Trump and Erdogan. But if Biden wins, then we're in a world of trouble, or at least in a world of uncertainty. And I think by September or so, both the Turkish and the global markets will start pricing or gaming the election outcome. Obviously, markets are not sentimental. They're agnostic. They don't care about the, social pros and cons of Trump or Biden. They care about the taxes, the stock market or bond market regulations. And in all of these boxes, Trump checks better than Biden. Therefore, a Biden presidency is probably troublesome for financial markets and for America's enemies and frenemies. We classify as frenemies. So the stock market bubble will swallow, will blow up, will blow until August or September. But then, if we're lucky, we will deflate it with minimal pain. If we are not, it's going to burst one day and everybody is going to be washed with hot helium. And you know what that does to the skin. Okay, well, thank you very much. You have watched another Real Turkey Channel broadcast presented very poorly and awkwardly by Atilla Yeşilada. I hope you like our videos and you share it with people who are interested in Turkey for one reason or other. I wish all of you a safe weekend. Bye-bye.